Hello there everyone, today's video is all about VAT, particularly with regards to partially exempt businesses. Now, what is a partially exempt business? Well, it's a business that makes both taxable, i.e. VATable, and exempt supplies. So in the VAT world, if you are making exempt supplies, you can't claim the VAT back on the purchases associated with making those exempt sales. However, if you're making taxable VAT sales, then you can claim input VAT back on all your expenses. So if you're a business that actually does two different types of divisions, as it were, one or more that are VATable, one or more that are exempt, then you have to attribute the costs. And you say, well, the costs associated with the taxable side of the business, where we add VAT to our sales invoices, we can claim that back. But the VAT on the purchase attributable to the exempt side, where there is no VAT, then you can't claim that back. However, the issue is, the problem for businesses practically is, what about all the stuff that's in the pot, the so-called overheads, where you have to attribute the overhead costs, some to the VATable, some to the exempt. Well, how do you do it? Because it's not entirely obvious. So in this case that I'm going to tell you about is also a recent court case, and it's a quite well-known company. It's actually the Hippodrome in London, and the Hippodrome in London has a mixture of entertainment, restaurant, bars, and gambling. Now, from a VAT perspective, just looking at the VAT, the supply of gaming services is exempt from VAT, but the supply of catering, for example, the restaurants, that is VATable. So what the Hippodrome did when they did their VAT returns, they said, look, we will work out the VAT that we can claim back on the overheads. So things like the rents and the professional fees and the insurances, all the kind of stuff that can't be attributed directly to either VATable or exempt. They said, look, we'll work it out on a fair apportionment method based on floor space. So, for example, they said, look, we know that the floor space of our casino is X% of the whole building. Therefore, that amount will apportion to the overheads is going to be exempt, and the percentage of the floor space attributable to the bars and restaurants, well, that's another percentage, and we'll apply that to the input VAT on the overheads and claim that back, which seems quite sensible. But HMRC challenged that, and it went to the tribunal. Why did HMRC challenge that? Well, HMRC challenged it because in the VAT law, it says fundamentally the starting point to do this attribution is the turnover of the business or the various divisions. So rather than do it on the floor area, you have to look at the turnover. And you say, well, the turnover of our gaming, i.e. exempt business, over the total of everything is X%, and then compare that with the revenue from the bar and the restaurant divided by the total, and that's how you get your percentage to claim back or not the VAT on the overheads. That's the standard method. You do it on a turnover basis. However, the law says you can deviate from that if it gives a more truer representation. And the Hippodrome said, well, yes, the floor area does give a more truer representation, not the income method that distorts it. HMRC said, no, it doesn't. The income method gives an accurate or a fair reflection. There is no real difference to having the floor area. Now, of course, there was a difference. That's the whole point, because HMRC took in more. In other words, they didn't have to pay out as much input VAT under doing it via the regular method on a turnover basis. But there was nothing to stop the Hippodrome, in their opinion, from doing it on this alternative, because they said it gave a fairer results doing it on a floor area. So the tribunal sided with the Hippodrome, as it turns out, and they said actually there was a big difference between working it out on a turnover basis and a floor area basis, that actually that floor area basis that you put forward, Hippodrome, overrides the standard turnover method, and they won the case. But just to give you an example, so I've thrown together some numbers. These are numbers not from the tribunal. I have no idea how much VAT was at stake, but I've just plucked some numbers out of thin air to illustrate this point. So, take a business like the Hippodrome, a partially exempt business. It's doing VATable stuff and exempt stuff. So, turnover, exempt 5 million. Turnover from taxable 15 million. Total turnover 20 million. Okay, that's what it's doing. So, input VAT that it has on the pot, remember, where it's directly attributable, it's not a problem, but on the pot where you have to try and apportion it, £4 million of input VAT. So based on the normal method, well, exempt turnover is 25% of the lot, taxable turnover is 75%. So you just go 25% of 4 million is a million, 75% of 4 million is 3 million, and that's the VAT position. So of the 4 million there, you claim back 3 million, and you can't claim back 1 million based on the 25%, 75% split. Now, what the Hippodrome guys said, they said, look, this doesn't give an accurate result for us. We want to do it on a floor area. And again, I've no idea what the relevant percentages were. I'm making this up to illustrate the point, but go with me on this. So, based on an alternative method for partial exempt calculations, floor space, exempt 15%, taxable 85%. Now, this would have been what happened in their situation, that figure there was lower than that figure there. In other words, the floor space, the exempt activities on the floor space were less as a percentage than just on a turnover basis, I would have thought, because that's obviously how it works in their favour. So, same numbers, 4 million, but now you can't get your hands on 15% of it. So, 600,000, 1 million, 3.4 million, 3 million. So you can see that the extra VAT recoverable is 400 grand, not insubstantial. So you're going to get an extra 400 grand that you can claim back as input VAT on your VAT return just by doing a floor area percentage rather than the default turnover percentage. And this was what was at stake in this court case. So do remember this. The takeaway from this video is, if you are a partially exempt business, so your company is both making taxable and exempt supplies, you have to consider this for how to claim the VAT back on the pot of expenses that need to be apportioned between the two. And the tip is that that is not always going to give you the best result. It could be that even though the turnover is the starting point, it's the default position, but you are in law allowed to go with an alternative, such as floor space. And it doesn't even have to be floor space. It could be anything else. It could be all sorts of things. As long as you can show that there's a fairer representation, a fairer reflection of the position than just the turnover. Now, remember, when we talk about VATable supplies in the VAT world, these are the percentages. 0%, 5%, and 20%. So even those businesses who are making zero rated supplies, technically the VAT is chargeable, it's just at 0%. But crucially, it means you claim the VAT back or on the 0% sales. So exempt, there is no VAT. Similar to zero rated, both will have no VAT added, but there's a crucial distinction in terms of getting the VAT back. So who said VAT wasn't exciting? But just the food for thought there on the partial exemption, and if you are making both VATable, one of these three types of supplies, 0, 5 or 20, and exempt, where you just forget VAT altogether, then in terms of claiming back the input VAT on your pot of expenses, think about how you're doing it and could you be doing it better. So I hope you like this video, and as always, I will see you soon.